So I would expect the market to struggle in this area somewhat. Later on today, we're going to get EIA oil stocks. That'll certainly move the market. We did get the API stocks yesterday, which generated that further up move. And we'll have to see how much that impacts. I think the oil market will be relatively quiet until we get there. We're backing up a little bit from the highs, but we do have a key 61% fib at 48.68 on the WTI with a level at 48.70. This is on the 2-hour chart. We'll certainly bring that up, and we're above the 61% in the Brent and above a key small zone of 49.27 to 49.61. The RBOB is just above. It's 38% of a bigger range, and we'll certainly take a look at that. And above, in front of that, is going to be 53.50 is a pretty key level. So we'll see how that all plays out. And we've seen the dollar-yen bounce back a little bit. We're not quite at new highs. I'm talking about highs as of yesterday, but we're not too far away. And as I said, the cable continues to strengthen. We're right up here, almost against the 38%. So we have obviously garnered some stability in the cable. This is, I think, more about short covering than anything else. Move this out of the way. So we're going to move into the charts. Yesterday we talked about, I guess we're going to move in, start with the gold right now. We've had some pretty good movement in the gold, and you know that the day before, not yesterday, but the day before that, we were looking for a move for this. We think we're trading right in here. We're looking for a move for the market to break down to eventually 1307, and we did make it as low as 1308. Then we talked about this in the webinar about, we shared this 1321 area. I thought that'd be a great, and it's actually almost close to 1322, but it'd be a great area to go on and for the market to go to and take shorts against. And we pointed out these two key fibs at the time, which was 1321, which is a 23% of the 1308, all the way up to the Brexit high of 1363. And I think that might be off. That's actually off a little bit here. I think that's the, because I had to adjust this because I had made a mistake on that. But let's go back. Hang on. Yeah, that was the 23% of that. And then 1320 is at 38% of the 1308 to this reactionary high of 1340. The last reactionary high. After we came down here. If we had the Brexit high, there's a 23%, but the 1308, this last reactionary high, so you had two key fibs on a very short-term basis coming in at that 1321. And I thought that, and we discussed that, I thought that that was going to be a great area to go on and take a short, which I did take a short my own self. Actually didn't hang on to it very long, so that was a mistake on my part. You know, because of the way that I don't trade gold that often. From time to time, I'll step in. I obviously traded during the Brexit and almost got my rear end taken off, but it actually turned out okay. But I thought that in light of the volatility and how far we had fallen to 1307, actually 1308, I was looking for 1307, that a pullback, a bounce back, this would be a very good fade area. And we discussed that because of the touches. That's why we had this highlighted in a, basically a double dotted blue line to show, this is a level here, but why this had a lot more significance. And then when you couple in the two fibs that put the, as we've discussed multiple times, and even more so even yesterday, put the probabilities on your side after a rally like this that we could potentially, see a real good pushback. And we got just that. We actually, I actually faded at 1322.20, and I tweeted out there was support in one of the chat rooms at 1320 and 1318. I actually thought we'd pull down to 1318 fairly quick, and then we'd be able to bounce right back. And what happened was we did go in and pull back, but we just kept dripping lower and lower and lower until we got all the way down. Like I said, we made this run down here to the 1312-ish area. I was even surprised it even got that low. And we've battled, gone in battles since then, and we've reasserted ourselves. And we actually made it all the way up back up here to 1327. And actually, if you can see here, that's a very nice little level right there. We're going to put that in here. You can see the touches coming across here. You see that right there? Generally, I do it through the body, but you can see how many times the market was touching here at this 27. And right where the market ran out of gas. And then you have here, you wouldn't call this a shooting star because the wick's not that long. It's a little bit longer than you probably want, but it's almost like a gravestone doji. So from there, you just go and work off. And, like I said, you're getting pretty good action in gold overall. Because like I said, even here, if you take the sell signal here, we bounce back here, but eventually we do make it beyond 20. We actually make it all the way down to the 18s. But for the most part, look at here, you go on and sell the gravestone doji. Let's say you get 20, let's say 24, or even worse yet, 23. Well, a move back down here to 20, that's still $3, and that's a nice chunk of change, even if it's $2. So we've had that nice action in gold, and that's why generally one of the reasons I don't like to trade gold is because you end up having to hold it, and I don't like to hold it overnight. But the action we've seen because of the Brexit has provided a lot of trading opportunity, a lot of back and forth action. And you can see this, like I said, how the market's gone back and forth, and how we saw that big move after, like I said, height of the Brexit. And then we talked about this on Monday, the idea that we couldn't even get above the 43. Here was the 43 here. So it boded for, at least in my opinion, at the time, a move much lower. And that's what I thought when we were here. I thought, okay, we're going to go down to 1307. Don't buy it until you get down to 1307. If you're, looking at gold, money, stocks, or something, take a look at the futures. Potentially, I think that we could eventually get down to 1289, but the 1307 was the first pit stop. You could go in and load up on your gold again as we made a move down there. But like I said, we made it to 1308. But this kind of swings in the market, you can go on and, if you're day trading / scalping it, you can go on and take advantage of that, which is what we were offering yesterday. For those traders, once again, I don't hold trades that long. This isn't about, holding for days and days or whatever. This is just what I'm, my forte is just day trading and scalping. So when I'm looking at trades like, I was looking at this, it's more for those that are looking to scalp the market. And obviously we're in that kind of environment. I've been saying that, don't fall in love with your positions either to the downside or to the upside. So a lot of people talking about how the SPUs are going to go to 1940 and 1900. And I told those people, even here on the webinar, had one gentleman tell me, I think, what was it, 1940, 1920 or something. Hey, look, don't fall in love with your position. It's not like that. I told that Reuters reporter also, it's going to be a microcosm of 2008 in the sense of the swings. It's going to be back and forth swinging. So you have to go in and play it that way. I mean, I said that same thing as I've seen this movie before. And that's what's going to happen, and that's where you had to go in and trade this. So right now, I mean, I think anybody who got an opportunity to short it in here, you could actually hold it for a longer move, actually. Because if we faded against here, you could keep a very tight stop just above this area right here. I would say right there, which would be 1330. With a close above 1330. That would be kind of like a very, very, very short-term bias pivot. Meaning if it recaptured 1330, you would not want to be short. And we'll go and highlight that in red. It's just this very short-term bias pivot. So the people that had a chance to short it here, I mean, even now, I'm not saying short it now, but I'm saying is it's going to have a tough time getting back over 22. But I think that this opens a door for us to go much lower. Now, the market's going to go back and forth, but at this point, it opens the door in all likelihood to move to test 15 here. But you'd want to try and sell it back on a rally back up, and you don't want to get above 22. So if you're saying, well, I want to jump in now, you definitely don't want it to get back above 22. It can still get back above 22 and fade, but the 1330 is where all bets are off. You'd have to say, I do not want to be short. So I think this augurs for a move all the way down here. Before you see some okay support, which is going to be this 1540. So if you're still short or been short, if you're trying to milk it out, initially this 1540 would be your first line of, I mean, you're going to get a little bit of a bounce here against this 18, but your first area where you'll probably see it try a little bit of pushback is around this 1540. Re-ask what's scalping. Scalping is just taking very small moves in the market. And people take, day trading where they hold it for a good portion of the trading day. Scalping is just moving in and out of the market, just grabbing short-term movements. Obviously, in the type of environment, volatile environment that we're in right now, you're going to see larger swings. So most people, associate scalping with very, super minor moves and try to move in and out of the market very fast, sometimes using, big volume or decent sized volume. But with the volatility that we're getting, you can move in and out of the market. And, like I said, I barely put this trade on it at 1322. And within about just a few moments, I was already up $2. That's what I'm saying is you're getting these moves here because of the volatility in the markets right now. Now we have the SPOOs now at 2038, and it's causing the crude to fade a little bit. I had that 2042 and 3/4 there. We talked about that being key. So we're going to move in and we're going to take a look at what's happening here in the euro. And you see that we're getting a lot of this herky-jerky movement. And it's almost the same thing we were talking about scalping. I told y'all yesterday that, we saw how the euro faded here. Pull it up on the 30-minute. It faded here at the 38%. And we're talking about this level. And I said, I think it's still a buy. You just have to wait for it to come back down. And I talked about 1042. And I said I think a little bit later it can get as low as 1037. But that 1042 area is a pretty decent area. You can get long again for a move back up. So we'll move back into the 2 hour, and you can see where the market stopped right here, 1036. And then you got a nice rally back. And I was pretty clear on one of the chat rooms that I was only looking for 20 pips. And even from 42, you're able to go in and catch a very nice move and get yourself a quick 20 pips. And because, like I said, I think that the market is still trying to find itself. We have the bias pivot at 1066, and the market's just flirting on both sides at the time, this 1066. But I thought that as we were falling back, markets were beginning to stabilize. So that would take the edge off the safe haven status, or the run into a safe haven status like the dollar. So it would allow the euro to go in and come back. And that's why I was looking for just a, quick scalp market, so to speak, of only 20 pips. I mean, it's a little bit larger than some scalps, but I thought in the market it would give you the 20 pips. And you were able to get that. And then the market pulled back, and we reassert ourselves to get back above 11. I just think this market is right. It's still just trying to find itself. There's no specific direction. If I had to do one way or the other, I would fade rallies in this market at this point. That's what we're looking to do. This 1118 is pretty key. If we can get above 1118, we can open up the door initially to test 1151. But I still think that even if we get above 1118, I still believe it's going to be a fade. I just think that the market could get above 1118. We could gun some stops and probably run out of gas somewhere in here, right around this 1176. I just don't think that the market, one of the things that you have to take into consideration also, even though if you're scalping or day trading, you have to look at the bigger picture. And next week, we're going to have the NFP, and that's expected to be a very nice bounce back number. Now, whether that pans out or not, which I do believe it will, the key thing is that the market believes it will, or believes there will be a bounce back number. Now, there's going to be a lot of people that are going to go in and, as you say, poo-poo the number and say this is missing, that's missing. It's the same people that always talk the same negative slant. You know what I'm saying is, it's the same people that keep saying, like Rubini and all those other losers, and the spoos keep going to highs and all-time highs, and those gals just keep getting proven wrong and wrong again. The dollars are worthless. It's going to go in the toilet. They get proven wrong and wrong again. I mean, Rubini was right one time, 2008, and he's been wrong. I mean, he's right that one time, and he's been wrong ever since. But once again, like I said, he gets a lot of pub for that call, but he's been wrong on the dollar and equities market since then. But people are still going to listen to them, just like the rest of the other people that, are going to go in and question all the data that's coming out. But the spoos keep going higher. And we're, jobless claims at 43-year lows. You know what I mean? So it's just a lot of other things. Home sales are up sharply. I'm just saying is, when you look at the facts, it's hard to dispute the facts, no matter how many times they try to massage it negatively. So at the end of the day, my thinking is that the euro is going to remain in trouble. And when you look at the overall picture, just from a technical standpoint, we've had multiple times, if you look at it just from a technical standpoint, we've had multiple times for this market to break out higher. And we did get this one breakout here that could have really opened the door for much higher prices. We came back down here, open this up a little bit, at this 1118. Now you see the significance of 1118 and what I'm talking about. So, I don't have time. If you don't know who Rubini is, I really don't have time for that. This has nothing to do with the webinar. If you're asking if you don't know who Rubini is, I'm not gonna. The webinar is about to talk about. If you don't know some of these players, then I'm sorry you don't know some of these players. But anyway, it has nothing to do with the webinar specifically. So anyway, you can see the significance of 1118. And we got this rally back, and it opened the door that possibly we could have one more big run-up in the euro. A lot of people were saying, hey, the dollar's Dollar's gonna, it's weak. It's not gonna make it. Same argument. So we fall back here to 1151. Obviously, they were thinking, the Brexit thing was going to work out. We were talking about this being a fade, but the point is, technically, the market can go on and at this point open itself up to a much lower move. So technically, it's going to look bad. Technically, it's going to go and it looks bad, but also when you look at it from an overall perspective, I'm just saying is that it's tough in the Eurozone. You can't really see any real growth, and it doesn't augur for technically for this market to move higher, nor even if you're looking at it from a fundamental standpoint. So it opens the door for us to move much slower. So getting back to, even if you're a day trader, if you look ahead, what's ahead of you, like the NFP, and they're expecting a bounce back in the NFP, well then you're going to look to go on and fade moves up here. Now, if you think about it, I mean, yes, we've fallen quite a ways, but then again, look how far we've come off these lows. This is 912, and we're up here, what, about 170 pips higher. My thinking is that we might be able to open up the door and hit some stops above this 1118, but I think this will be quickly faded. So once again, like I said, even though I was willing to be a buyer down here, it's just on these short-term moves. I think that ultimately, if we make a move up here towards this 1150, it's going to get slapped pretty good. It probably won't take much for us to get past the 1118, where we can squeeze some stops, and we'll have to see how far. I mean, maybe they can make it up to 1189. Kind of doubt it, but maybe. But there's going to be some big players who are now looking for 106 and 102 in the euro, and they're not going to be swayed by 150 pip rally in the euro. They're in it for the long haul now, and they don't see the future for the euro to be higher. So these people are not going to be swayed. So can we bust and hit those stops above 1118? Absolutely. I think that we can, but I think it's going to be faded. Even if we hang around here, even if we get past 1118 and we were able to skunk past 1151 and we get into this area, this is probably the prime area, if you can get, that you want to basically no questions asked. You just want to hit it, which is going to be this area right in here, between 1189 to 1176. That is actually this reactionary high here. But I'm thinking anywhere in here, so if you bust out the highs, this might just be, I'm thinking we'll have to see what gets us there, but could be very short-lived. Even if the NFP were to come in weaker, or not necessarily come in weaker, but come in where it surprised to the negative side, in the sense that, expectations, it did not meet expectations. Let's say it came in at like 138. Even though that'd be positive, that would be well below expectations, especially if you saw back months written down, not a whole lot, but written down a little bit. Then obviously that would open up the door for the euro to rally. That being said, that would be just like manna from heaven, because those big banks are not going to let go of that 106 and 102 calls in the euro. They're not going to. They see the handwriting on the wall. So if they were down for a couple of weeks, 3 weeks, 4 weeks, it's not going to make any difference to them. They're going to be shorting it. The big hands are going to come in here, and they're going to sell this thing. So you just have to play it that way and see how it goes. So that's here on the euro. And we'll take a look here on the 30-minute here. On the 2-hour, we have the 1118. Obviously, on the 30-minute, we talked about this before. The levels vary a little bit differently. I like to look at things on a 30-minute too. The time frames I look at are going to be the 2-hour, the 30-minute, and the 5-minute. Now, when it comes to FX, generally, I'm only looking at the 30-minute. I mean, if it's a fast market, and I'm talking like NFP, then I'll look at the 5-minute where the market's swinging back and forth in a very short time. Obviously, the Brexit thing was absolutely huge. I wasn't even looking at it on a 5-minute because I was looking at the bigger key levels as to where to, well, actually, I was buying it at different areas and then jumping out very quickly. But obviously, when I'm looking at crude, I'm looking at a 5-minute, for super, super short-term trading, and to get a feel where the market is breaking down or breaking higher as far as the momentum of a move. But like I said, you get a little bit of a different look when you're looking at the 30-minute. One of the things I like about looking at the 30-minute also is I'll color in these zones. These zones kind of tell me where the market wants to go and what it wants to do within this zone. Perfect example is you can see how the market rallied back. Yeah, we overshot the zone a little bit, but you can see price movement is captured within the zone. So one of the things I'd be looking at if we started to rally was the market potentially running out of gas around this area of the zone. Obviously, we got all the way up to 1169, so I may have to move this zone up a little bit higher because that's twice we've made it up here. So I'll probably have to move this zone up higher. So it's probably 1169 where you'd see the market have the most trouble on a move up if we want to potentially squeeze past that 1118, which I think that's an option because I don't think there's a lot of conviction on a short-term, very ultra-short-term basis. I think we can easily pop past 11 to 18, but from a bigger standpoint, they're going to be looking to go on and fade those moves. And it's going to be, the market, the shorts are in the big hands, so they can withstand 150, 200 pip move against them, no problem. They have an idea, whether it's right or wrong, but I'm saying their idea is, hey, we're going to 106, we're going to 102. It's not going to change anything with these people. Nick says, yeah, I mean, I really need that person to stop bothering me about Rubini. Like I said, if you don't know some of these players, this webinar is for short-term trading, day trading, scalping. If you don't understand some of the players, like a Rubini, that guy's name's been around since 2008. We're in 2016. If you don't understand some of these people, then I'm not here to go in and talk about who George Soros is and who Jeffrey Gundlach is. If you come to this webinar, at least as far as those people, it's under the understanding that you have some modicum of knowledge when it comes to that. But this webinar is geared towards short-term trading. It's not an investing market, and it's not a market history type webinar either. It's geared towards short-term trading. So yeah, we'll go and take a look at the euro yen. I don't mind answering questions, but the point is, everybody here, like let's say Nick, they're looking for levels on the euro yen. I would say probably at least 95% of the people on this webinar know who Rubini is. So I can't waste the time of the webinar explaining something to address, let's say, one person who doesn't know who Rubini is, and it's not like that guy came out of nowhere. The guy's been, his name plastered all over the place since 2008. So I can't spend time, if you don't know some of these people. And it's not that big of a thing. It's a reference point. But Nick wanted to go and look at the excellent question, excellent answer by Nick. He said, just Google him. That's it, just Google him. Rubini, R-O-U-B-I-N-I. It's that simple. Yeah, James said the same thing. They should go to YouTube and type in those names and see and hear their names. Yeah, that's it. Yeah, because we can't waste time like that, So let's take a look at this. Nick says for a potential short at 114 on the, yeah, that's what we've been taught. We've gone to. We discussed that yesterday. So here it is. We're looking at it actually on the 30-minute, but okay, let's crunch it back up. We're going to look at this on the weekly because remember it was a weekly where we said, wow, this is really a huge level. If you look here at the 114, that's huge. You see that? It's rallied up here. And the reason is I'm not trying to be you know, a person doesn't want to help people, but this person apparently they don't even understand what the meaning of the word scalping is. So they're, you know, there's nothing wrong with being a neophyte in the sense that you just don't know. But I'm saying if you go to, and I would think this is a semi-advanced webinar. If you go and you don't know, or you don't even know what the meaning of the word scalping is, and like I said, you probably need to go in and get some books. I'm not saying that in a negative way. You need to probably get some good books and you know, learn about trading. But the questions you're asking are rather rudimentary questions for an advanced level webinar, and we can't spend time on that. So I just wanted to clarify that because I don't want anybody to think that I'm just trying to be, you know, not trying to be helpful. I'm saying if you don't know what scalping is, then this webinar might just be a little bit too advanced for you. So anyway, so getting back to the euro yen, you can see the significance of the 114 level here. You see right here, you can see here the touch is back, and this is on a weekly chart right now. You can see here, this is a 10-year chart on a weekly, so you can see the significance of the 114 on the way up. It gets beaten down, try it again, beaten down. We rally up here, we hold it, we rally them up, we come back down and find support at the 114. Like I said, we went through all this, but just for those that might have missed it, you can see the significance on a weekly chart of 114. So let's go in and move this to a 2-hour. And so here we are at 1409. And we've run out of gas here. I mean, we got about as close as you could get. There's 1401. You see what I'm saying? And we talked about this yesterday. So, you know, they're not going to ring the bell for you. I mean, when you got there to 114, that was it right there. There's 1401. And we saw here 1409 is a huge weekly level. 1427 is at 38%. And now this is on a weekly chart. Doesn't mean we can't push higher, but here's the way I like to go and trade, and I've said that before, is when I see a big level, generally what I like to do is, and this is on a 30-minute, I like to, you know, when you throw a ball against a wall, it bounces back. So my thought is, I'll take the first whack. So here we are, we got 1403, you see? You hit, this kind of gives you you know, we're not that much lower from 14, but the thing is that we hit the stops at 14. I guess we could open up this a little bit further. And there was really no follow through. You see that? We got to 114, and they couldn't hit the stops. And the 1409 was the weekly resistance. So at that point, you just take the short. And now you want to have a plan that you want to scale in. That's what I'm saying is knowing, hey, look, if it gets above that, I'll sell the 38%. I mean, you don't load the boat at 114. But I'm saying you can probably, you know, once you see the market starting to struggle, I don't trade euro yet. You can take a short and just say, hey, you know, let's see if it bounces off. Because if you've got to think about it, this is on a 30-minute chart. And it's already rallied from 112.94 to, that's up 200 pips. And it's just on a 30-minute. So you're going to figure they're going to get some pushback. And you're thinking, okay, they'll probably take out 14, and then you get to 14, 11, 12, whatever. You're like, whoa, wait a minute. It's running out of gas at 14. 13.95, 92, 90. Whoa, you know what? I'm going to take a short real quick. Short here because I think we're going to go in and break them low. They can't even get a move above 14. So you're able to catch some of this move down here. That's what I'm saying. You're able to go in and grab yourself easily a quick 30 pips. Okay? It doesn't mean that we won't keep on falling down, but I'm saying is what I like to do is when I scalp against a move, I'll look for a major level, I'll take the scalp against it, and I'll put that money in my pocket now. So let's say I grabbed myself 25 pips. I didn't catch the bottom. I didn't catch the top. I just, you know, maybe I'll catch myself 25 pips. Okay, then I'll watch the market and see what it wants to do. Now, if we read ourselves above 114, I'll say, okay, now I'll take on 1407. Because once again, I've got 25 pips already in my pocket. And then if it works on higher, okay, well, I'm cool with that. You know, we've got the 38% here. We've got the zone up in here. I know that I'll be holding it for longer. So usually the first run up against a key, I've said this before with the analogy on the European crossover webinar. Think of it this way. You need to go in and you need to bust through a door. The first time you go in and you kind of brace yourself and you hit the door, you don't hit the door with full speed because, or full energy, because the door might be solid as a rock and you might go in and bust up your shoulder. So you hit it, that first hit, you're taking it kind of sideways or taking it on, you hit that door with your shoulder. It's kind of like you're testing it. You see what I'm saying? So you're gonna hit it. You're not gonna be able to go through it. So that's my thinking is these guys test it and they get knocked back. It's just a matter of how far they get knocked back. When they reassert themselves, now they know about how strong that door is, so they put more pressure, and sometimes they can hit past, in this case, the 114, and we'll see how far they can blow past it. But that first hit, like the ball against the wall, it bounces back. That's why I would have been fading here against the 114. But once again, to get back to this, you've got this area here, 1409, is a weekly level. You know that's solid as a rock because you know it's a weekly level. So they're going to have a hard time getting past it. Even if they could get past 1409, there's a good chance they wouldn't even be able to close beyond it. So you could, take it on this move. What they'll do here, I would say their support right there. You see that? That's 1361. We'll draw that in real quick. Right there. You see those touches? Right there. And we'll go in and mark this off real quick. So we're probably going to bounce off here. Maybe we can make one more last stab up here. Obviously, we're in a volatile environment that if the market gets spooked again, you're going to see the yen. You're going to see the yen going and strengthen. It doesn't mean, like I said, we could still make one more run up in here. I think that the market stand is going to be quite equal. Here's the deal: is you have to go on and keep track of what SPOOs are doing at the same time, because obviously the yen as a safe haven currency is going to go on and have this little deal here. And also the euro on top of that. The funny thing, not the funny thing, but the key thing about this pair is it's not just, obviously it's a pair in the sense that the euro and the yen, but both of them right now are key players in what's going on right now, in the sense that if the market gets scared or we become risk off, obviously the euro is going to take off. But the point is the yen, but the euro is also a key player in the same equation with the Brexit. So some of these moves can be quite exaggerated. I still think there's probably a good chance we'll make it up here above the 114. But I tell you what, I think that that's about as good as it gets. I think that any moves above this 114, you'd want to go in and look to go in and fade them. Shirley says, I can't hear you. You probably have to go in and redo your, jump in and out of the webinar, because we're not getting any reports of anybody else not being able to hear. But that was about 6 minutes ago, so maybe she'll leave. Oh yeah, Kip said log out and back into the webinar. Kai says he wants to go to the SPOOs right now, so he doesn't even want to wait. And that's fine. I'm happy to do that. Let's go with the SPOOs because we've had a big, you're getting some big impact. And I tweeted out that 42.75. I tweeted out in one of the chat rooms, and I also tweeted out in the, on my regular feed about this. And so let's move into the SPOOs, and we'll talk about what I was looking at 42.75. And right now we're 4 handles lower from that area. It actually gave an opportunity for some of y'all to jump in and take that short if y'all did. We're going to move into that, so hang on. Kai wants to see that now. We almost went to that at the beginning of the webinar because things were moving. Let's move into that. That's why I'm seeing this 42.75. Let me go in and take off this this fib. The moves have been so great that it's, might have a little bit of tough time to seeing where this. Here's a 42.75, and you can see I already had that drawn in. Actually, like I said, I tweeted it out. I go, and if it looks like it doesn't look like it's a big deal, but look how far we've rallied. You see what I'm saying? And we had a nice sell-off from there. We topped out at what, 43.25, and so you had a chance to grab yourself 3 quick handles on this. But 42.75, the market. I always tell y'all, the market always remembers the levels. And right off the bat, I knew 42.75. Remember that. Well, on the way down, even before on the way down, 42.75. If you look at the volume here. You see, here's 42.75. You see all the action that was taking place here? Right here, we can actually probably even move these up here and here. Make it more visual. You see all the action that was taking place here at 42.75? A lot of volume. Look at that. The market rallies from 1994, and where does it run out of gas? At 42.75. From 42.75, just to give you all a, not trying to say an understanding, but to put this in perspective or for it to resonate with you. And Kai says that's actually 46.75. You're right here. You're right. That's the 46.75. And we had mentioned it. And here's the 42.75. Excellent. Thank you very much, Kai. Appreciate it. And I have it here, Mark. So great. Well done on you. It's a 46.75. But you can see the 42. Both of these were key, even on the way down here, because you can look here. There was action on both of them, but you're right. And when I tweeted this out this morning, I said 42.75 is key level. I said key resistance level, and I put comma, and then I put 46.75, knowing that, hey, look, you're going to have to, if you want to take the short against 42.75, you're going to have to put your stop above the 46.75 because they can even squeeze up a little bit higher. But they would run so far. To be honest with you, I was even surprised they were able to get a whole lot past the bias pivot of 34.25. But as Kai said, that's correct. This is a 46.75, and here's a 42. Once again, another battle zone. Not as significant as a 46, but you can see where the market found support multiple times here at the 42.75. Well, on the way down here from 21.19.75, look where we stopped at. 42.75. Now, once again, the real volume was a 46.75, but the 42.75 was key. Now, we rallied up here with the thought was, hey, it's all going to be remain, and the polls were turning. I mean, I thought it was going to be leave, and I'll be doggone on the. I kept telling Blake, no, it's going to be leave, it's going to be leave, it's going to be leave, and I'll be doggone on the last day. I succumbed to the polls. I even said, well, I guess it's going to be remain. I'll tell you what, that's the last doggone day I ever believed polls. I don't care if they say that Trump only has 1% of winning. I'm not going to believe it. I don't believe polls anymore. Never again. No, they had it so wrong. And there's all kinds. Everybody has Monday morning quarterbacks. Yeah, they didn't. They only polled the London area. They didn't. I don't care. Everybody's got an excuse. I'm not interested in anybody's excuses. I'll tell you one thing. I'll never be fooled by a poll ever again. The whole doggone time I said they're going to leave. I said because whether you agreed with them or not, and I was for the leave. I said the leave crowd, or the leave bunch, has the best. I can't remember how it was when I said it, but their argument to me seemed to resonate, even though I was already for the leave. Their argument, without all the other junk on the side, the bad stuff, was it made the most sense. That's what I thought was going to be leave. And I'll be doggone all the way up until the last day I was saying it's going to happen. And that morning I came on the air and I said, well, I guess they're going to go and stay. And then I got fooled by the polls. I mean, I didn't buy into it as far as trading wise, but I said, okay, well, I'm waiting for this rally, and then I'm going to fade this good strong rally. Obviously, like I said, until the wheels started coming off later on in the evening, then I realized, wait a minute, and at that point then I was trying to look to be a buyer on an extreme move lower. And I did okay, not anything great, but because I believed in the polls, I missed this whole thing. If I had not believed in the polls, I'd say, well, you know what? They're going to get, I would have been quicker to react and benefit in the downside move. But anyway, back to where we are. You can see on the way down the significance of 42.75. So all the market has done is revisited back this level, and that's why it's so important to have your levels in place and also to mark your levels, because by marking your levels, you don't have to look back and think, okay, because I don't even see that many people ever mark their levels. I did it myself because it makes it easier for me, so that if a market's moving fast or moves to another level, like I'm saying crude, I'll say, you know what, I remember that level, and I don't have to think about it. I mean, I remember the significance of 42.75. So this morning, anybody who decided to could have taken that short there and made themselves a good 3 or 4 handles on that move, and you really you're only down by half a handle. I'm not trying to necessarily advocate trades. I'm just saying is that these are good areas that I'm looking at a level and I go, wow, look, if you look at it here, this is why it takes such greater importance here. I'll show you why. So here's this last reaction, and the market, it will always go back to it has more of a recency bias. So here the market fell and we rallied hard. When the market fell on the Brexit, we rallied, and look where we ran out of gas. Right here. Now the market eventually went back up here, but I'm just saying is we ran out of gas initially at 42.75. Then we came back down 20 handles before we ran it almost all the way up here to 67.50. We ran out. So look, that's where we ran out of gas again, which was a 42.75. So I think we're overdone a little bit. We maybe squeeze a little bit higher, but we got way overdone. You have to think about it this way. Anybody who bought down here is probably looking to take off, if not at least half. Most people, I would think, take all of it off after a big move like that. And I was a buyer down in here, although I came in too early on that day. And I ended up getting skunked out. And I even told, when I got interviewed on Friday, we were trading, was in the 40s or something like that. And I told the person, we're going to test 1999, which is the lock limit for the Brexit. And and we're going to go to 1975. It wasn't too bad off. But I came in a little bit too early. But I thought it's all overdone. And I told y'all, this is a UK issue. It has nothing to do with the US. And I tweeted that out earlier today. If it wasn't for the rest of the jacked up globe, the spooks would be at all-time highs. But we have to deal with the rest of the jacked up globe. So that being said, I think that we're overdone at this point. We're going to have to back down. The first stop on the short-term basis is going to be this 34.25. But I think this 26.75 is going to be key right in here. We can dip to, this would be the area where I think you'd want to get back in if you get short and cover, right there. Between 22.50 to 26.75, they'll probably eventually test this 22, but we'll have to see what news gets the market concerned and worried. We'll flip into the 30-minute for a little bit closer view. I haven't even updated the levels here from way back. I've just been pretty much paying attention to the 2-hour chart. So you can see I need to update them. But you can see that we got a buy signal. I don't use, the only technical indicator I use is exponential moving average. And I only use it on one time frame, and that's the 30-minute. And you can see here that we finally switched over to the buy signal right here. I don't take it to initiate positions, but what it does is it puts me, it tries to, although lots of times I don't pay attention to it to my own detriment, it puts me on the right side of the market in the sense that it tells me which way the momentum's going. But you can see here the significance of the 42.75. right here, where the market was running out of gas. Now, once again, like I said, we've had a hell of a move on this 30-minute. So I have to see what it does. Or maybe we can make it up to 46.75. But I think that the market's gone too far, too fast, and we'll have to back down. The areas of interest on the way back down are going to be 26.75 to 22. The old bias pivot, or the lower bias pivot, is actually here at 18.75. And actually, on the chat room, I was one of the chat rooms, I'm in the Wise Trade chat room, but also another chat room. I tweeted out I'm shorting 2018, and caught some money yesterday going lower. But my point is that to say that is that why I look at the key levels, and 1875 was a bias pivot, as is 34.25. But 1875 is very key. 1875 has been key since January of last year. It was a big key. At the time, it was 1875 and 38.75. Those are the two key bias pivots as the market swung back and forth. Not January of 2016, but January of 2015. The market doesn't forget these levels, and these levels not only have significance, they resonate with people. And it just sticks to people. And they know what the market, I won't say what they're going to do. What I'm saying is they know that the market is going to have, basically, with these bias pivots, it's almost like an inflection level. Either we get beat back, or if we get above it, we really take off. You can see how the market moved above it. We came back to 1875 essentially for support. The market held it, came back in here, and we were able to go on long shot. But I think that the market, even if we make it up here, 46.75 is going to be a stretch. But we've looked at the 2-hour, and once again, we're going to flip back, and then before we go on break, even if the market can assert itself, it's going to have one hell of a time getting past 46.75. Hell of a time. Because you have to think of it this way. There's going to be a lot of supply. Look at that. If you do it from a volume, and I'm not a volume analysis guy, but I do look at it a little bit, but I look at it more as the touches. There's going to be a lot of supply above the market here at 46.75. A lot of supply. So we do know about this 52.50 because you remember we talked about shorting into this area here. And then we saw the market really come apart. There's going to be a lot of supply here at 46.75. There's going to be probably some funds or big guys that take a short against this. And they're not going to worry about this 52, 57, 52, 50, 57. They're like, you know what, the markets, there's a lot of supply. They're going to be laying off longs here. They may see if they can squeeze it up in here into the cash equity open, but they're going to be laying off longs here. That's my thinking here. It doesn't mean we're going to go all the way back down, but we're going to have to go back down to search and find value again. Shorty said, hi, Paulie, a month ago, Blake was talking about a service you were going to start regarding following your trades. Any more information on those? I'm going to tweet something out on my regular feed. Blake has his own thing going. I mean, Blake has with Nick Trades and a couple other people. It's what's it called, like FX analysis or something like that. But yeah, I did. Mine was actually I was someone had come to me and then. But there is a one, but I'm not going to do it on this webinar. But I'll go in and post it on that. But yeah, I do have a thing where we do post. I do actually the webinar here in the webinar. It's a free daily webinar, and I do give the analysis, and I do give what I'm looking at right now. And I actually tweeted this out on my regular feed, and some people were able to benefit from that. which was shorting 42.75, or I put the resistance. Not like I said, in these kind of markets, I want someone to say, "Boy, you got me into this trade, and I wouldn't have done it." So that's what I said. Hey, look, everybody has a different risk analysis and what they consider risk or not. And so when I say 42, if I say something is a pretty good resistance level, and we've already been going in one direction, you pretty much already know what I'm doing. And I said that at 42.75, the market backed off 4 handles. So you'll have a chance to take advantage of it. But yeah, it does on that one. We do. I'm talking about trades even like I did with the euro yesterday. I said in this webinar, you want to go in and buy it around 1042. And we bought it at 1036, and we had a very nice rally. Although I did say when we got into it, I said, hey, look, I'm only looking for 20 pips because I'm just letting this market do whatever it wants. But yeah, that one it has a trades like during the course of the day. But so it's time to go in and take a break. And we only take one break in the 2-hour session, so the break is about 12 minutes long. That gives me a chance, like I said, gives y'all a chance to get water, tea, coffee, whatever, and gives me a chance to give my voice a break, because like I said, the webinar's for 2 hours, and I just take one 10-minute break. And so we'll be back, and I'll put it on the news. Someone had recommended that before, so that way it's just not sitting on the chart. So we'll go to the news, that way in case anything pops up, you can see that. And we'll go on and catch y'all back here in about 12 minutes. And thanks for joining us here on the European crossover.